Good morning, everyone, and thank you so much for joining us today on a Saturday. I know that for some of you it's early in the morning. I received so many messages from people in Vancouver and saying that it's so early in the morning for us, but still we are joining in. So thank you so much if it's an early morning for you or it's late evening for you. Thank you so much for still joining us. Just make sure that your speakers are on mute all the time. What we're gonna do for the Q&A, we're gonna keep it at the end of the session so that we will have enough time to go through over your questions. You can have either raise your hand and I can unmute you, and you could go through, you can speak and raise your question yourself, or you could put it down on the chat box at the end of the session, and I could address that, to Peter, and we can go through your questions. If we would have limited time. Of course, if you have any questions which we didn't address, please send me an email to the TCAE mailbox. I will happily send it to Peter and ask for his advice on your answers. Just to tell you that this is a recorded session as well. We're gonna record this session, and all the sessions that we have are gonna be posted on the TCAE website. If you've missed any of the sessions, you can go to the TCAE website under the knowledge series, and you can watch the previous recording. So if you had a chance, make sure that you can have the access to do that. And as well, this recording will be posted on the website later on in this week, and you can as well go back to it whenever you like to get the information. Just a little bit about myself, to tell you that who I am. I have been in regulatory compliance and financial crime for the past 14 years. Majority of my experience have been in Middle East and mostly international. I moved to Toronto from Dubai less than a year ago. And currently I'm working with one of the international banks and in the anti-bribery and corruption program for Canada and Latin America. For the people who they have not been used to TCAE or Toronto Compliance and AML Events, just want to give you guys some background to who we are and what we do. So I started the TCAE around 6-7 months ago. The reason why I started it was because I saw that a lot of amazing events, webinars that are happening in the city in Toronto, and there are very few that have knowledge about it. So I created the LinkedIn group for the TCAE. We have over 550 professionals, majority based in Canada. In this group, I created this just for all the professionals to get information, to connect with each other, and get as many information as possible about all the events that are happening. As you all know, around 6 weeks ago, I launched the knowledge series, which we are bringing in subject matter experts and industry leaders to walk us through some of the important topics in financial crime, compliance, and even the broader aspect, cryptocurrency, fintech, and etc., to educate us during the downtime. So we launched that around 6 weeks ago. This is our 6th session, and And I'm really pleased to tell you all that we have as well, aside from the website of the TCAE, we have launched the apps. You can download the app for TCAE on your mobile, either from the App Store or from the Google Play Store. You can all go now and download the app so that you can access the information about the upcoming webinars or sessions, pre-hand and accessible through you and through the application. So with that, I'm gonna introduce our speaker of the session today. We're gonna have Peter with us today. As you all, many of you know who Peter is. And Peter has been one of the greatest mentors in Toronto and in Canada. He's been in the industry more than 30 years. It's an honor and privilege to have him today with us. He dedicated his time. He is a very, very busy person, but he was kind enough to give us his time today to walk us through one of the amazing models that he implemented to complement the session that Joseph had done last week for many of us that have been on the session. So with that, I'm gonna give the floor to Peter. Peter, the floor is yours, and please just walk us through it for today's session.
Thanks very much, Suzanne, and congratulations on how the TCAE has developed, and the fact that we can now download the app, I think, is amazing. I'm really honored to be here this morning. I see we've 124 people online at the moment from UK, Dubai, India, Taiwan, Canada, US, to name but a few countries. And I definitely have to give a shout out to some of my colleagues and friends and mentors who are online: Bob Kapoor, Giles Dixon, Melanie Lefebvre, Shan Lu in Taiwan, Joseph Isu, who, as you said, Susan, did a great job last week as a segue to this session. And following this session at 11:30, Gary McGeechee, who I'm not sure if he's on the line, will be holding a session on AML Advanced Focus Series, which basically takes suspicious transaction reporting to the next level of understanding. We've got Matt Tremblay on the line from the US, and our latest LinkedIn comedian, Stephen Brent Sargent. If you haven't seen his video yesterday about the difficulties he had in logging into various webinars, then you must. It's a riot. So thank you. It's going to be fun. Next slide, please. So 360 investigation model, is what we're going to talk about today. Aligned with that is what I call the AML Thinking Map. And then, as Suzanne said, we'll go through some questions and answers. Next slide. And thanks, Suzanne, for doing the slides and being in control of the slides this morning. This article in ACAMS Today I published in 2017. And it really goes through in more detail about the model that I'm going to talk about. And I highly recommend that you read it and print off the thinking map at the end if you find the content valuable. It's free. You can just type in ACAMS 360 into Google. It should bring you to this link. The model itself actually dates back to, I think it's 2007, when I was tasked in transitioning Royal Bank of Canada's financial intelligence unit from a unit that operated on a checklist approach to one that operated on a risk-based approach. And really what that meant was when I went there, there were a number of people investigating suspicious activity and filing SARs or STRs, suspicious transaction reports. But really they didn't understand fully what they were looking for, what was truly suspicious, what was not suspicious. and they were merely going on a series of red flags. So if it hit more than 1, 2, 3 red flags, it would be an STR to our regulator FINTRAC, and without any real explanation as to why it was actually suspicious. A risk-based approach is one where you have trained and trusted investigators who are empowered to use their knowledge and skills to make that decision, and not just rely on red flags or indicators. It's a much more rewarding position for somebody than just being in a checklist routine, pumping out the STRs without really understanding why. And it really, and it was aligned with, in Canada at that time, about 2007, where the industry, the major banks in particular, were really coming under the scrutiny of the regulators as to not doing a really good job on the AML front. So that's how the model came about. It was also, what I quickly found was, as I built this unit, the FIU, and, you know, quickly we got up to 35, and eventually we got up to as many as 150, I think, investigators and analysts, etc. But what I found was there were people running to me with all excited because they'd been empowered and trained, and starting to talk to me about a case, for instance. And they really started on the activity. Look at all this cash coming in and out, the wires, etc., etc. And I would ask the question, okay, but what does the client do? Oh, we haven't got to that yet. And I said, well, how can you understand the activity if you don't understand the client? So I developed this model as a means to provide consistency of thought process and investigation for the FIU, and it worked extremely well. I should also say I then, at the same time, I came up with a definition of risk, a simple definition, and it's the lack of full information upon which to base a decision. So the more information you have, the more informed your decision will be, and hopefully the more correct your decision will be to file or not to file a suspicious transaction report or a SAR, suspicious activity report. So that's the background. Since then, it's made its way to BMO Bank of Montreal, when I did the same thing at Bank of Montreal. And I know pretty much all of the major banks in Canada have adopted the principles of the model, albeit some call it something else. It also is very familiar to Canada's regulator, FINTRAC, and was subject of I think the only truly successful examination in Canada to date of a major bank. So whilst FINTRAC doesn't endorse anything, they certainly, I think, appreciated the concept of it. So just to kind of go through a little bit more about what I just said. So it's a risk-based investigations model. So risk-based means you can't do everything, so you do what's important. It's a holistic approach, as we'll see. It applies critical thinking skills, and this is aligned to how you actually select your investigators. You know, part of the selection process under me when I was running the FIUs was, I think 70% based on critical thinking ability, because knowledge can always be taught, but critical thinking, I think, is innate and inherent. I define critical thinking quite simply as the ability to make a decision based on reasoned argument and articulated in writing. So the ability to make a decision, say why you make that decision, and write it succinctly so that a regulator, etc., can understand it. The output of the model obviously is whether or not something is suspicious or not, and whether or not a report should be filed to the FINTRAC or to the regulator. And it aligns perfectly with the current and past guidance from Canada's regulator, FINTRAC. The model's also been presented to FATF and the Egmont Group as part of Project Participate last year. which, if you're not familiar with Project Participate, was an industry initiative. Most of the big exchanges, crypto exchanges around the world and others, basically compiled a list of indicators of suspicion in the cryptocurrency and fiat banking space, because no such guidance exists in a comprehensive form to date. That's gone to FINTRAC, Egmont, FATF, law enforcement, regulators around the world, and has been very well received. And the 360 model is actually embedded in that document. Next slide, please. It's simple. It's simple. For those that know me, they would know I'm a visual person. I don't like reading reams of text, etc. I like looking at a diagram. I like rolling up thinking to a higher level, and that's what this model is all about. As you can see, and I would encourage people to print this off actually if you're interested in this, and have it by the side of your desk or at work, as I know many investigators do and have done. It's six simple steps. It's called 360 because you're looking at all the accounts that a customer has, not just the one. And if you think about it under a checklist approach, it's kind of ridiculous where a customer is flagged in, say, their checking account, and you look at the checking account, but you and find that maybe something's fine and close it. But if you looked at some of their other accounts, you'd see potentially money laundering. So you look at all the accounts. The degree as to how deep you look and how far you look, the breadth and depth is the scope. That's why it's called 360 model. Thanks. Yeah, so breadth plus depth equals scope. So breadth is, what's the cutoff point? How far do you go in terms of connected relationships, joint account holders, etc.? Really, that's a matter for your own policy makers within your institutions, given time frames, etc. Depth is the look back period. Again, it's subjective. Typically, an institution will look back 90 days from the date that the suspicion is flagged. Others may look back 60. Others may look back more. It depends, but breadth plus depth equals scope. Thank you. Next slide. So the first step of this 6-step model is how the activity comes to the attention of the investigator or the analyst, and we call that the trigger event. Typically, in a bank, it will be an internal referral. In Canada, these are often called unusual activity reports or unusual transaction reports, UARs or UTRs. I'm sure around the world you call them other things, but somebody within your own institution brings it to your attention in writing. Triggers can be adverse media alerts, law enforcement referrals, whistleblower schemes, anything and everything that causes something to be brought to the attention of the investigator and land on your desk. Can also be, of course, the output of transaction monitoring systems as well. The main point here around the trigger event is the trigger event should not cause you to go into an immediate myopic, subjectively based investigation mode, just focusing on what the trigger was. So for instance, if a UAR was received by yourself and it was from a teller, a bank person on the front line, and it's talking about the customer maybe smelling of marijuana, or as Joseph said last week, their cash smelling of marijuana. The inference is that this is a drug dealer dealing in weed, marijuana. That's fine, but you don't just immediately go down that road, that rabbit hole, because you might be wrong. It might be white collar criminal who actually happens to smoke weed as well. So the trigger event is obviously of interest, but what you do, you obviously have a look at it and then park it away in your memory into that vacant parking lot, and you bring it back into the thinking process a bit later during the model, so it doesn't contaminate your investigation process. Yeah, and we can all read the last bullet point. So this is really, really important, and this is common sense really when you think about it. And you know, the latest FINTRAC guidance talks about this, and over the years I've had many discussions with FINTRAC around reasonable suspicion and identifying suspicion, etc. And we all agree, everybody agrees that any investigation into the activity of a customer, their transactions typically, have to be considered in context. And that context is you first understand who the customer is, because otherwise how can you understand what they're doing? It's pretty simple really. So you can you know, you can put your own bullet points around this and use the thinking map as well. But who is the customer? You know, obviously their identity, their gender, their age, their occupation, their background, their status, PEPs, etc. What do they do? Okay, their occupation might be this, but how do they actually generate their wealth and their income, etc.? And what is the risk around the nature of their profession or business? What products do they hold? And why do they require, for instance, wire access, remote deposit access, etc.? The geographic footprint, where are they located? Resident, obviously. Where do they do business? And all the nuances and concerns around geography, such as sanctions, etc. And also the likelihood of, say, Miami, Black Peso exchange type activity, etc. Relevant adverse information, RAI, is commonly called. I think every institution does it in some shape or form. Sometimes it's just one person reading the newspaper on their coffee break and finding stuff. Other banks, etc., might have quite sophisticated providers that they pay to monitor not just the media, but the adverse media, etc., the social media. Not too many, just go back please, not too many institutions, when they're running adverse media searches, consider the positive media, confirmatory media that you'll find that supports the understanding of the customer. That's just as important as the adverse. Okay, thanks. Next slide. Next slide, please. Thank you. Yeah. So this is just bringing in the understanding of the customer into now the next step, which is understanding the activity of the customer. Next step. Next slide, please. So obviously you're looking at all their accounts. You're going to concentrate maybe on the flagged account more, but you're not going to ignore the other accounts either. And how do you go about that? So you have your look back period, typically, as I said, 90 days before the trigger event. Hopefully your banks, etc., will have systems that pull together all the account activity into one place for that period, so you can look at it electronically online as opposed to printing it off on paper, etc. Royal Bank of Canada, when I was there, actually built internally a great system where every alert, transaction monitoring alert, was accompanied essentially by an Excel workbook which summarized all the activity in all the different accounts. But a quick way of looking at all the activity. And just in a logical way, the easiest way to approach this is to eliminate the normal activity. So you understand who the customer is, what their activity should be, and then you eliminate what's normal, so grocery purchases, rent or mortgage payments, utility, wages, personal spending, etc. On the business side, obviously payroll, payments to suppliers, overheads, rent, etc. As it says there. Yeah, thanks for bringing these up, these call-out boxes as we speak. Once you've eliminated the normal activity, what you have left is what you should be concentrating on in terms of your investigation and analysis. Next time, yeah. Thank you. And this is the real focus of your investigation. And this is where you bring back into your thinking the trigger event. And ultimately, this is where you bring in the AML Thinking Map, which we're going to talk about shortly. And really what you're trying to say to yourself, you're going to look at all the activity and ask yourself, does it make sense? In every step, does it make sense? Does the source of funds make sense? Does the use of funds make sense, etc.? Does it make sense? So I'm just seeing these chat boxes flashing up here. And it's difficult to obviously cover every scenario that you might see. But this is where your critical thinking skills come in. This is where the more information you can bring in to your thought process to make that decision as to whether it looks normal or suspicious is important. This is where you conclude whether a report is warranted or not to the regulator. Next step, yeah. Yeah, and as it said on the slide, you can read again, this is some FINTRAC guidelines. One of the great things, one of my great achievements, I think, was, go back please, was with FINTRAC was actually through discussion with them, changing their guidance, which previously said, when you're considering if something is suspicious, what would the average Joe on the street think? And I said to FINTRAC, well, we're not the average Joe, we're trained. And so they changed the guidance to reflect that, similarly trained or experienced individuals. And knowledge and experience is obviously important here. This is where you bring in the indicators of suspicion. I hate the word red flags. I know FINTRAC says a number of indicators can turn into a red flag. I personally, I consider indicators the same thing. But one indicator might be, okay, it's unusual, potentially. When you have 2 or 3, then, okay, now we're starting to go down a path here of suspicion. Every case is different. And every indicator must be taken into the context of the understanding of the client. It doesn't do any harm to reach out to trusted colleagues and seek their opinion, but ultimately make your own decision as to whether or not something is suspicious. Next slide, please. A really good, if you can do it, it goes by definition, if there's no crime, if there's no predicate offense that gives rise to the proceeds of a crime, then by definition, money laundering can't exist, because money laundering is, as we know, is disguising the proceeds of crime. So if the funds are legitimate, then there can be no crime, with the exception, of course, of offenses like tax evasion, where the funds might start off legitimately and then be criminal in the way that they're applied or hidden. Relevant adverse media can point you to a potential predicate offense. And so it's very useful if you can establish a predicate offense to do so, but don't guess. Unless you have some strong reason to support your suspicion that it is related to fraud or something else, then arguably your SAR should not, or your STR shouldn't call it out as a fraud without some further clarification. Okay, next slide, please. Yeah, I'm just reading this slide myself. It's quite a heavy slide. I think it just summarizes what we've already said. But this is all about activity in context and indicators in context. And it's just common sense, really. For those of you who are members of ACAMS, ACFCS, in positions that can be verified in a bank, etc., you may be interested in obtaining a copy of the Project Participate report, which is not publicly available, but is shared with trusted members of the community, and really goes into indicators in a big way, albeit in the crypto space, but the principles are the same and can be applied to the traditional financial space as well. Jerry McGeechee's session, which starts at 11:30, I think is available through LinkedIn. I think would be of great interest to people in terms of further considering the how you form that suspicion or make that decision as to whether or not something is suspicious or not. It's a little bit more advanced, and it also goes into the Canadian definition of a money laundering offence, which is foundational to the understanding of money laundering in Canada. So you make your report or you don't make your report, but in either case, you then make the divestment decision, sometimes called demarketing, closing out the client's account. And it's not a thing that you do lightly for obvious reasons. Banks, etc., are there to attract customers, not to get rid of customers. But we want good customers, not bad actors, of course. And really, the decision is based on the severity of the activity, the level of suspicion about that activity, and the likelihood that that activity will continue. So, for instance, in Canada, you basically have two regulators. You have FINTRAC, which is the country FIU, where you send your suspicious transaction reports. And then you have OSFI, the Office of the Superintendent of Financial Institutions, which is more about governance and risk mitigation by financial institutions. So you might satisfy FINTRAC by filing STRs, but OSFI during an examination will certainly question you, well, why did you keep the account open and allow it to continue, albeit you're keeping on filing STRs? So it's a balance between the two. And in many banks, this is obviously a very sensitive area, closing out customers, and is usually delegated to a specialist unit, demarketing team, etc., staffed by experienced and senior people. Next slide, please.
We're gonna have a polling question for the next slide. It's gonna be a very easy knowledge test that gets everyone attention to see that how we have done so far. So the question is, the 360 model review all accounts proportionate to blank. So fill the blank. Let's see how everyone is doing. We're gonna give 30 seconds. Okay. Awesome. Receiving 80% of the votes. Okay, 100. Great. Okay. Awesome. So yes, the correct answer is risk. Amazing. Perfect. So everyone had been listening so far, so great. Thanks, Peter. So
I'm glad I got that one correct.
Yeah, absolutely. Awesome. So let's move to the AML Thinking Map.
Okay, so a thinking map is not a checklist. When you look at the thinking map in the when you look up the ACAMS article, the thinking map is at the end, and you can print it off and stick it on your wall. It looks as though, at first glance, it looks as though it might be a checklist, but it's not. It's basically in 5 categories, and it's a series of prompts to help you think your way through an investigation to see whether you've covered off all the different areas. And it's based on 5 WH generally, you know, who, what, how, why, when, and why. Excuse me, I've got a tickle in my throat, just going to cough. So first category is, as shown, customer identification and verification. So it's, the thinking map is, again, it's a series of prompts to yourself where you're asking yourself questions. And at the end of each category is that last caveat: does it all make sense? Does it all make sense? Does it all make sense? So, you know, we'll go through some of these, but who is the customer? Who is the customer as opposed to who they purport to be? Are they really John Smith? WorldCheck might tell you something else. What is the documentation supporting the authenticity, say, of a corporate identity or a customer for that matter? How much reliance can you put on that documentation? Sanctions list, WorldCheck, etc. You know, how is things concerned? And ultimately, does it all make sense? Does it all make sense? If you remember nothing else, does it all make sense is the thing to remember. So the next category, what they do or the business that they're in. Again, I'm not going to read every single one of these off. You can read them for yourself. But it's all about looking at 2 sides of the equation. You know, what they do, okay, how can you confirm that, etc. Does the activity relate to what they do? I think the third category, going from the left on the top line, is important in terms of policies, your policies and procedures within the banks. Does that fit in, both legitimately and ethically, I guess? And ultimately, does it all make sense? So next category. Source of funds. This should actually say source and use, source, use, and destination of funds, actually. Ultimately, with money laundering, as we all know, you focus on the source. With terrorist financing, it might be different. But for money laundering, generally, you focus on the source. Where do the funds come from? How are the funds generated? Are they legitimate? If they are legitimate, are they being diverted illegitimately, like for tax evasion or something like that? Again, this is based on 5 WH, you know, who, what, how, why, when, where, and does it all make sense? Source of funds is probably the most important category of them all. Destination. Again, this builds on, from a money laundering perspective, it adds color and weight to the source and legitimacy or otherwise. From a terrorist financing point of view, obviously, funds used for terrorist financing may be legitimate. And the focus with terrorist financing is more on the destination, arguably. But again, these are just prompts to yourself. Have I covered this off? What I would say to you is, if when you're conducting an investigation and you think you've finished, just have a quick look at the thinking map, go through the prompts, and it's a really good way of reminding yourself if you've missed anything. And I would argue, if you've covered off all the prompts, then you can go to your manager, supervisor, regulator, and really have a qualified argument to support your decision at the end of the day. And does it all make sense? And again, this is a big thing that's actually, you know, the products a customer has is something that on face value you just might take for granted and not really question why they have such products, or so many products, or so many accounts. You know, what's it all about? This can be really important. One of the things that comes to mind on fraud, actually on romance fraud, which obviously involves money laundering as the proceeds move, romance crime. You know, one of the indicators, certainly in the last bank I worked out that we built in was a normal customer, maybe a retiree or something like that, who's never sent a wire in their life, and all of a sudden they're sending wires overseas, you know, to the fraudster, to the scammer. That's a big red flag, and inconsistent with their normal activity. Next slide, please.
We reached to the Q&A. Thanks, Peter.
Yeah, well, hopefully I've covered everything. It's a simple model. It's not rocket science.
Yes.
And to quote myself, does it all make sense? Hopefully.
Yes, definitely. It was, and thank you so much. It had been an amazing and informative session. We're having some Q&A during the session, so I'm gonna ask some of the questions. If everyone has got questions, please put it on the chat box. I'm gonna address it to Peter. We have one question from Bob. He's asking, are there some situations such as a clear case of structuring where any of these steps are not necessary?
Yeah, so I assume that's my friend Bob Kapoor, who's a guru in his own right. Yeah, so let's talk about the US, for instance. So in the US, structuring is actually an offense and is reportable in its own right. So if you identify structuring, even although it could be for legitimate reasons, it's automatically reportable. In Canada, it's not, unless you suspect that there may be money laundering. So a clear case of structuring reminds me of when I first went to Bank of Montreal, and one of the cases I first looked at was a fast food restaurant that had maybe 20, 30 STRs filed in respect of their transactions. And it was all about cash coming in at lunch or after lunchtime, cash deposits. The people couldn't speak English very well, and it's thought to be suspicious, you know. And the cash was always below the $10,000 reporting threshold. What it turned out when they went and spoke to the actual owners of the restaurant was the people bringing the cash to the restaurant were the restaurant runners. The activity, the restaurant was cash-based. In fact, myself and other people at that restaurant, our lunch, it was a Nation restaurant, it all added up. They were paying for their supplies, etc. It was just cash-based. They didn't want to hold that much cash on the premises, so they'd send the runners who didn't speak English to the bank. It was easier for the runner to go put in less than $10,000. Otherwise, they'd be questioned by the teller. So it did make sense. So every case is different, Bob. If it's clearly structuring for the purpose of what appears to be illegal activity or for nefarious reasons, then yes, it would be reportable for sure.
Awesome. We have another question from Jules. Jules, I'm gonna unmute you. You can ask your question.
Thank you, Suzanne. Can you hear me?
Yes, we can.
Peter, great job. Thank you so much for the presentation and giving your time to us this morning. I just had a question regarding stage 2 of the model, specifically in that stage of understanding your customer. And I wonder if you could talk to us a little bit about how some of the challenges of understanding a customer in a virtual asset space, where quite often we see large chunks of customers operating in a kind of unverified status. So how do you go about bolstering your knowledge around the customer in those scenarios?
Interesting. Can you hear me?
Yep.
Yeah. Yeah, it's interesting. I mean, unverified customers in the crypto space are actually quite ubiquitous around the world, including Europe. Normally there are thresholds in place around that. So what I'm talking about here are customers who only trade in cryptocurrency, crypto assets, virtual currencies, don't deposit funds in fiat or don't exchange their cryptocurrency for fiat through, say, an exchange. And depending on the institution, to open an account in those circumstances, really you only require a username and an email address. So your question was around what are the challenges in, I guess, identifying or verifying your customer. In these circumstances, it's based around obviously their activity and the nature of their activity. So if you're a trading platform, for instance, and a customer is depositing, let's say 5 Bitcoins, and immediately sending 5 Bitcoins out to an account somewhere else without doing any trading, then that is suspicious or unusual. And pretty much all exchanges, I think, would have procedures in place where those transactions are questioned and the customer is questioned, and more identifying information is required. That answers your question?
Yeah, great. Thank you.
Thanks, Charles.
Great. We have some number of questions actually.
Yeah.
Here. So Claudius asking a question. Claudius, I don't know if you can hear us. The question that he's asking is that, Peter, the last example you gave, when an STR is filed in that instance, does the victim become the high-risk client in this case? Claudius, can you tell us that what example so we can clarify your question?
Yeah, thanks, Susan. Can you hear me?
Yes, I can hear you.
Yeah, so Peter mentioned a case where the customer was sending money overseas, apparently to some fraudsters. My question is, in this case, when you file an STR, because the customer is sending funds to an unknown individual overseas, does that customer become a high risk? And how would you describe that customer in the STR that the customer does not look like the suspect?
Yeah, it's a really interesting question, and I assume that's Claudius from MNP.
Yeah,
a knowledgeable man. Yeah. Yeah. So if people aren't aware, FINTRAC published an operational alert on romance fraud, and I would encourage everybody to read that alert. And certainly in Canada, there's disagreement with the requirement to file STRs that relate to victims of fraud, which is the point you're trying to make, I think. I think what you have to consider is, what does STR stand for? It stands for Suspicious Transaction Report, not Suspicious Persons Report. So what you're actually reporting is suspicious transactions. And aligned with that reporting of the suspicious transactions, you're identifying the people associated with those transactions, like the remitter, the account holder, the beneficiary, etc. And in the free text part G of your STR in Canada, you make it very clear that X is the victim and B is the potential suspect that the fraudster. And then I think the last part of the question was, so in relation to the victim, does that make them high risk? Well, they're a risk to themselves for sure. They're a risk to the bank in that if they're allowed to continue doing that, the bank has a potential liability, civil liability to, that they let this happen. But also a liability, I would argue, of allowing money laundering to continue unabated without some intervention by the bank. So I would think that most banks would bump that customer up to a higher risk customer, or at least cause them to be reviewed more regularly.
Great.
It is contentious. I'd love to hear Bob Kapoor's view on this, actually.
Bob, if you're on the line, if you want to give your thoughts on, I can unmute you. Awesome. Okay, probably later on we can hear his thoughts. Okay, we have another question from Rominder. He's asking, tax evasion and business to personal activity cases, where do you draw the line?
Tax evasion.
Rominder, if you're on the line.
Well, tax evasion in Canada is a criminal offense. Sorry, go ahead.
I just meant to ask, like, a lot of cases we see that, you know, activity, like people who are in businesses, they are transferring money to their personal account, and we just send them a notice that sees the activity, like you should be doing business activities in your business account, not in your, you know, personal account. But a lot of time we also see that, you know, there is tax evasion going on, and it's hard to put a finger to it, like where it is, like what's the kind of tax evasion going on. So what is, do you have any special guidance for such cases? Like how you see, do you used to tackle such cases? Like, you know, tax evasion is not very easy to, you know, track amidst the normal cases, right?
Yeah, unfortunately, I don't have any special guidance. Certainly during my time in the banks, many of the cases of tax evasion we identified was because the customer themselves said something like, wink, wink, don't tell the tax man, literally.
Yeah.
We would see that. You know, the example you gave about mixing business and personal account activity, you know, if you look at my account, I would draw dividends from my business account into my personal account, for instance, and that's quite legitimate. And I pay tax on it at the end of the year.
Yeah.
It is very, very hard to identify.
Yeah.
I can't offer you a panacea for that, unfortunately.
Yeah, that's the most confusing part of it. Like, you know, we have to go with the grain of salt, and like you said that, you know, focus on the customer, where it's coming from and where it's going. So I think that's the learning here.
Yeah.
Thank you.
Thanks for your question.
Awesome. Peter, can you tell us that what is your advice for the companies or even investigators, you know, that they want to start with implementing the 360-degree model for the first time? I know that we have a lot of audience from around the world, and probably they want to implement that. What is your advice for them to start the implementation of this model?
Well, I think whilst the model is designed for everybody, it's really, it requires managers or supervisors to put this in place in a consistent way across a team or a department. Having said that, you know, within your own department, if your training procedures are slightly different, I think you can still use this model privately in terms of how you think about and how you approach an investigation. I would say bring it to the attention of your manager or your management team, but don't shove it down their throat, if that makes sense.
Yes, it does. Yeah. And one more question, with nowadays with the COVID-19 and a lot of probably new trends are coming up into the monitoring. How do you think that we can reflect those trends into the 360 model?
Well, it's two different questions here, because monitoring, people seem to think that monitoring can be done instantly overnight, that you can change transaction monitoring systems overnight to, you know, to produce a different output or to look for something different. Whereas in reality, it can take months and months maybe even a year to make a change to transaction monitoring scenario or rule, because everything has to be validated, etc. But in terms of generally the application of the model to C19, it strikes me one of the indicators of the virus is, with people getting laid off, their activity is going to change greatly, or even if they're reduced hours, etc. So somebody who's laid off, for instance, shouldn't be having the same activity as they would have if they were still working. And equally, if somebody's receiving stimulus checks on one hand, at the same on the other hand, they're getting wages, there's something wrong there as well. So each case is different, but you just apply the model looking at a particular case, and if you see a stimulus check in there, if you know that segment of the industry in which the person has worked, or that restaurant has gone out of business, etc., and yet the activity still looks the same, then there's something wrong there. So every case is different.
Absolutely. Great. We have a lot of other questions, but I think we reached the top of the hour. So unfortunately, we're not able to answer all of the questions, but please, everyone who we haven't answered your questions, or you have a question, please send your questions to the TCAE mailbox. We will try to address as many as we can. Thank you so much, guys, for your time. As always, we have a certificate of attendance for everyone. I'm going to provide you with a link of a knowledge test that we are going to have about this session. So once you get the link, you have 2 days to submit the answer to your questions. You would be getting your certificate if you answered 75% or more to the questions correctly, and you can get the certificate within a couple of hours. So thanks everyone for joining in. Thanks, Peter, for your time. It was a great pleasure, to have you with us today. We're really honored to be with you today. Thank you so much for giving us your weekend, your time of the rest to all of us, and provide us with your knowledge and expertise.
No, thank you. And don't forget that 11:30, it's Jerry McGeechee's Advanced AML series starts. So I'm looking forward to that.
Definitely. For everyone who still on the line, we're going to have the polling question for which we have at the end of the session. We want to know which of the topics presented to you would be of your interest. Please give us your idea. What do you like to know about? Which topic is of your interest, so we can address it and we can bring subject matter experts for the upcoming sessions. So I'm going to give 30 seconds to everyone to choose from the polling question, and then we can finish the session off. Amazing. Great. Okay, so let's see the result. Okay, cryptocurrency is the first one definitely to be in, and then AML investigation and fintech are kind of a tie. So definitely we're gonna bring all these amazing sessions for you on future sessions with the knowledge series. Thank you everyone for attending. It was a great pleasure having you all. Have an amazing weekend, and please share your feedback to us, connect on LinkedIn with us, give us your feedback about the session, let us know how can we improve, what are the things that we can improve. I'm listening to you guys. This is for the community. I've done this for the community, and this is basically for you. So I've been listening to you. You asked to increase the number of participants, and I have done, and I'm really grateful for your support and encouragement. So thank you everyone, and have a great weekend.